Hello, this is Money in the Federal Reserve, Section D, the Federal Reserve, or the Fed lecture. Our prioritized standard is Economic Standard 53. Objectively, we're going to distinguish how the Federal Reserve is structured at the national, district, and local levels. Now, the fear of a single central bank dominated by a few wealthy financiers actually led to the decision to create the Federal Reserve System that was split into national, district, and local levels. At the national level, the Fed is made up of the Board of Governors and also the Federal Open Market Committee. That's where they actually meet, which is led by Chairperson Jerome Powell. Now, the Board of Governors is actually an independent 7-member panel that guides monetary policy using reserve requirements and discount rates. If you're curious where these 7 people come from, well, those 7 people are nominated by the president. When they get the job, they serve actually a 14-year term. The logic is you have a long time to serve, so you don't have to worry about falling to political pressures. So after their 14-year term, so basically one opens up about every 2 years, and then the president will nominate someone to that, and then they serve their nice long term there. Also at the national level, the Federal Open Market Committee, or FOMC for short, is a 12-member panel that guides monetary policy through open market operations. If you're curious where these 7 people come from, well, those Board of Governors we talked about before, those 7 people, they're also a part of this. Additionally, the New York Federal Reserve Bank president is also a part of this. And 4 other district bank presidents serve a rotating 1-year term. So those are who the 12 people happen to be. At the district level, the Fed is made up of 12 district Federal Reserve banks. The district banks actually state reserves, meaning they tell banks how much money they're not actually allowed to loan out. They tell them, you can't loan out more than this amount. They will set a limit. And they also provide loans to member banks. So if for some reason a bank within any of these districts doesn't have enough money, they can actually get a loan from their Federal Reserve Bank. Also, the district banks are going to be supervised by the Board of Governors. So all the member banks that are within the different districts are going to be supervised by that Federal Reserve Bank there in the middle. At the local level, the Fed is made up of member banks. All national banks actually must become member banks. That's a part of their charter as a bank. You have to be a member of the Federal Reserve Bank. And state banks may join. So if your bank got their license to operate as a bank from the state government, they could be a member of the Fed if they want to, but they could also not be if they also don't want to. Should point out, both member and non-member banks are also subject to the Fed's reserve requirements. So if you're a member or not, you still have to abide when they tell you how much of your vault money cannot be loaned out to other people. And also, you may use the Fed's services regardless. So if you need a loan, but you're not a member bank, you can still get a loan from the Fed even if you're not a member bank. Now, the Fed performs several services for banks and the government. The Fed provides services that are going to be for banks, like clearing checks, which is actually a method of crediting and debiting reserve accounts. So how this works, so let's say this person writes a check to this person. So for this person to get their money, they have to put their money into their bank. And then their bank will contact the other person's bank, like on the check, to get their money, and then they have to go to their Federal Reserve Bank to transfer the money out of their account, and they transfer it to another account, and then, hey, you finally got your money. So that is nice and long and confusing. Also, another service to banks is lending reserves to commercial banks. So if a commercial bank needs money, the Fed will provide that service. Now, the Fed also provides services to the government. For instance, the Federal Reserve actually serves as the government's bank. So like when you pay your taxes for the federal government, they don't actually take that to First Tennessee Bank. They just take it to the Federal Reserve. They do all their banking for them. Also, for the government, the Fed supervises the Fed's member banks to make sure that people are doing what they are supposed to be doing. And maybe the more common thing the Fed does, you might have actually heard it before you started this lecture, they supply the U.S. paper currency. So if you ever looked on U.S. money, you might have noticed at one point it actually says Federal Reserve Note, meaning the Federal Reserve is responsible for every bit of money that is printed and cut up and then basically sent to your local bank, where you probably actually get your money in the first place. All right. The Fed also plays an important role in controlling the money supply through three tools that make up the government's monetary policy, which include changing reserve requirements, changing discount rates, and buying or selling government securities on the open market. We'll talk in depth about how these work in a future unit. All right, that was Money and the Federal Reserve. Section D, the Federal Reserve lecture. Our prioritized standard again was Economic Standard 53. And objectively, now you can distinguish how the Federal Reserve System is structured at the national, district, and local levels.